So the dollar is just cooling pretty much, and like that's what I was sort of saying, sort of coming into the end of the week. And this is the thing: you can still have this macro theme of the dollar getting stronger, but it doesn't mean that you can't get those intraday trades. So where are we at now? It is 9:54 a.m. on Saturday, 27th of June. So a little bit earlier this week, actually, so which is nice. Sort of knock it out of the week, knock it out early in the weekend. Chance to have a look at sort of how the week sort of ended up, what we can hopefully expect for the week coming forward, and see if we can sort of pick out some sort of some larger sort of trends that we can sort of work out. Basically, we're going to be buying the dips or selling the rips. It's funny when you have these sort of things like, I was looking at this before earlier. I pretty much turn on these charts and just get straight into it. So, that way it's sort of straight off the cuff. It's as I do the analysis, it's as I sort of look at the charts and just my thoughts just pretty much straight up with it all. But I did look at this thing and I was thinking how sort of, this was the call yesterday. This is the dollar. And initially we're on 4 hour here at the moment. And if you saw the analysis yesterday morning, so I've started doing 2 or 3 of these videos and updates and that sort of throughout the days. And of course, we can do a little bit of a longer version on the weekend when we've got a bit more time. But, this little move up here, early Friday session, a little bit of a pump up. I was thinking about just in terms of these sort of like, sell the rips, buy the dips and that kind of thing. They're like how people have these cutesy little things that pop and drop, these sort of kind of cutesy, cutesy little names for these things. But realistically, that's exactly what we got. So, it's one of these things when you look at the charts, when you really sort of hone in on only trading a few things, pick out what's correlated with that, what's going to be that sort of indicator that you can say, hey, look, if this lines up, that lines up, well, this is how I'm going to be tipping the scales and in my favor, basically. You get to know the nuances about these kind of things. And as I said, look, enough of all that kind of stuff. We can actually get into the trade. We can look at sort of how this dollar had started to sort of pull back before we actually got this drop into the second part of Friday here, which was very good for the pop on the metals. I'll get into Aussie in a bit because obviously that's got a couple of other factors. Obviously it's not part of DXY, but it is across with the US dollar. But it did not respond, certainly not in the same way that we saw the metals kind of respond off their lows. So, just because we've had this pullback doesn't mean the dollar's done. If we sort of look at where we're at here, this is the 2025, this grey area here is 2025 high. So we zoom right back here. We can see an exchange. If we get on the daily, might be able to sort of see it a little bit better. But as you can see, where I've marked out here, this is what I call the body fill. So yeah, you've got technically there's this whole area between like, the highs here to here, and then you've got the highs here down to here. So that's the whole sort of area, but the price can sort of reject anywhere through this kind of zone. It's not sort of like a guaranteed that because this is a wick and it got rejected at that time. So the safe bet when picking these targets, in my opinion, and the way that I sort of aim for these things is what I call the body fill. And the body fill, you can see, was that purple line. And look at where we got to in regards of all this. Let's just get this off so you can clear it up. Yep, cool, that's sweet. Body fill, bang, clipped, came down. So you're not looking to maximize extra, 2 or 3 points of these things. You want to guarantee, lock in, hit that sort of price target, and then sort of, pull back on it all. That's fine. So we get back on there. So look, we hit into an area. Why this is significant is because this is a target, right? So the market's seen previously, all things considered. Obviously, it was moving in a different direction, but all things considered, when it was coming down here, the market said, hey, look, I'm going to hold, I'm going to buy as long as it can hold this area. They push it up, broke through, that's fine. This is on a daily as well, mind you, but the price action and the flow is exactly the same on all the different time frames. Obviously, the higher time frame is more significant, yada, yada, that's fine. But you can see that as soon as the market got a chance to sort of get out, like see these people here, they tried to hold it again at this zone, bang, they push through. People don't sell. Like people that are sort of like, okay, look, I'm not, okay, let's just say probably not retail. They're not putting their stop here. Retail will put their stop underneath the lows here, kind of thing. And the market knows this. And generally, that's why you get these little sort of stop out kind of moves and that. Look, depending on what you're trading time frame, this is a daily, which is a larger time frame than I tend to sort of trade. So, you know what I mean? In certain respects, that's the perfect place to put it. because obviously here we can see it chopped through, came all the way up here. Not everybody trades that. Of course, not everybody trades the same way. But the point is, the reason that support and resistance are the same thing is because when the market gets a chance to sort of bail out of these positions here that maybe they didn't take the loss straight through here, they get out. And they get out for flat and they reassess. And that's why we start to see that second wave sort of coming down with more sort of selling pressure there. So what we're kind of looking at here is an area in which the market, for whatever reason, has bought and sold it before. Support, resistance, same sort of thing, just depends what direction you're coming from it. These things don't break through first time. So that's why we put the target at the body fill. We've seen the reaction. Markets push back here a little bit. It doesn't mean game over. It just sort of means that, hey, there's a reason why we may be sort of seeing a bit of a pushback here, which is why we sort of could sort of trade that little sort of potential short-term dollar weakness. But if we look at the grander picture with the dollar right here, and depends where you want to take these moves. I mean, this move here with this fib particularly is actually just from this larger sort of daily move. As you can see, we had a pullback here. This was FOMC, and we just absolutely ripped up through here. So this is what I've been touting. I've been saying the dollar wrecking ball and that this is what it does. It just goes up and up and up. It gives a little top signal and goes up and up and up. So I would still be wary of this thing around this area. Like, I still think that we have destiny up around 103 at least, but there's a reason to have a bit of a pullback here, but it doesn't mean that it's necessarily a top. If we look at just this move here, we can't even get down below the 23%. If we take it right off the lows, it gets even worse. Well, I mean, worse in what respect? You know what I mean? Worse for anybody that's maybe trying to fade these things. It's not even down to the 23%. So, you know what I mean? It's still like, this is where we can use the Fibonacci, and we can see that this move as a whole is still very bullish, very strong. You get 1 or 2 day pullback. Well, market didn't wait. They're not waiting down here necessarily at this point. They're saying, hey, look, we'll snap it up early. If we get onto a lower time frame and we look at sort of just this more recent move, so this is obviously that little top signal that we had sort of last Friday. So we're coming into sort of, this is kind of Monday open last, well, it was actually technically Saturday close here. Well, Friday close, depending what part of the world you're in, but for us in Melbourne, it's Saturday morning. And you take that drive up here because we had a bit of a pullback, we had a new low. So I'm just looking at this particular leg after we've just made a little lower low, a little bit of a trap, and then bang, it's pushed up. And we look at that move there, 61%. And this is the analysis that I did yesterday. I said, look, we got the two sort of potential moves that are going to be coming through here. The first one with the cutesy pop and drop kind of name. Well, we did get that. We got the pop and then we got the drop and it came down here. And I said this blue line is where it's going to be determined. So look, regardless of it all, I was looking for called a little bit of US dollar strength early, because remember, the thing is super bullish. So it's not just going to melt. It's not melting down. So you're going to get people continually trying to push it up. But as soon as we saw those sellers come in here, we knew that our target was this blue line. Once we broke through that blue line, where did we think it was coming? Well, we thought it was pretty much sort of come down here. Possible with a bit of an overshoot to come down here because we've got a bit of congestion, supports and that around here. But if you look exactly where we actually bounced, 61% of this move here, that's fine. We knew it was having a bit of a pullback. But if you look at sort of where we've got the selling here, well, that's exactly where we had the buying over here. Support equal to resistance. So there's people just go, yep, cool, that's it. Like these people here, I told you, sort of like, it's the same sort of thing. This is why I say it's the same on every time frame with it all. There's people that sort of saw this as a top signal. There's still people out there, I mean, like it sounds like I'm sort of a biased nut, but there are people out there that still think that this dollar move is fake, despite it just ripping up whatever couple of percentage it has there. And so what they've seen this little top signal over here, and they've gone, yep, big spike out the top, bearish kind of engulfing day the next day, comes back down. Yep, here's a top, stop above the highs over here. What does it do? Bang, and rips up over here. People don't necessarily, not everybody's trading to get out for the pip, you know what I mean, to save themselves right here. So when they go, okay, whoa, geez, hey, this thing's going wrong, and it goes up another, what is this? Another sort of, 70 points or so, and they come back down here, well, they get a chance to get out for flat. Okay, got that one wrong. That's cool. Get out for flat. Boom. What do? They close their shorts, which adds to buying pressure, and we start to see price appreciate a little bit more there. So look, the fact that we broke this rising support and we've closed on the outside, I think opens the idea that we could be in for a little bit more sort of consolidation. If it was going to power through, there's a couple of things that would have happened here, in my opinion. And this is another tell that I think sort of like was a bit of a good indicator. We were over here, was it? On Thursday night. Yep. So Thursday night, coming right up to this high over here. I covered this on Friday as well with the analysis, but we had a bunch of US data come out. This stuff just here. So we had sort of like GDP, we had unemployment claims down a touch, which is obviously positive. You had, durable goods. I don't really sort of follow the income spending and all this kind of stuff so much in that, but still PCE was pretty much as expected, revised up previously. Like this is all positive, US dollar positive data. And you got to look at the price action around what happened when they had that US data that was positive. Well, it's pulled back, it's moving up to it. That is the time in which, if they wanted to, should have gone like this. That should have been the breakout kind of move. Make that a direction for whatever it's worth. It's only emphasizing just this point. That should have been the time. But what did they do? They sold into it. And that's a tell with these kind of things. Because it's like when you get data. Well, I mean, literally, like you get data just here. But it's like anytime that you get data and you've got this justification of why, on paper, it should be going higher. But the market doesn't act like that. It didn't sort of go, hey, look, you know what? That's just another big tick, US dollar, let's keep on rocking. No, it sort of took that data and said, hey, look at this. There's going to be a whole bunch of people that are seeing this and thinking, wow, that's really good. Let's buy the US dollar. And so they use that to sell into. It's kind of a buy the rumor, sell the news, or buy the rumor, sell the fact, or whatever way you like to sort of say it. And I think that's a tell. Because it doesn't mean that the game's over, but it just sort of means that, they use that positive momentum plus positive data, they use that to exit. So that starts a bit of a chain reaction, which moves down like over here. So where do I sort of think it's going at the moment? That's kind of like a bit of an overshoot of what we're looking at. Look, I still do think we are moving up. That's your breakout level though. You need to get above that one. So when we get above that one, that's fine. Come up here. We're going to be targeting this blue line up the top over here, which is kind of, if we step right back out again, that channel. That's the idea. That's the trade here. But the way that these things break through, when you're going through a support or a resistance, you generally don't come firing straight into it like this and then break out. That's generally not what happens. If you're going to see a break, these things will sort of move up like this, and then they'll sort of consolidate. If I can ever take the arrow. Consolidate. Like this. Okay, enough. Yeah, we get it. Consolidate, and then they'll break through. Not necessarily that length of time in that. But very, very, very rarely, if I would say, if ever, do they do this and just break straight through. It's a significant level. It's a point where we can expect the market. We've seen the market take profit and obviously try and defend previously. So we know it's important. The fact that it's pulled back doesn't mean anything. It's just a normal market mechanic that we can expect that reaction. That's fine. It offered a little trade, offered a bounce in the metals. Pretty decent, actually. I'm just having a look on another chart here. We went from, 39.81 up to, we went 110 bucks through that move through here. Play that how you like. If you think that that's the bottom, well, good on you, but I don't think it is. But I do think that that gives us, one, a short-term bounce, which I obviously traded long with the metals yesterday. I don't think that's done yet, so I think the metals have probably got a little bit higher, while we get a bit more consolidation around this area over here for the dollar before it gets ready and then does this and then breaks through. So this at the moment is this area here. This is the consolidation period. This is what I'm kind of expecting. Whoops. through this period here. This could come down a little bit further, whichever, whatever. Look, the fact that short term we broke this rising support means that, okay, momentum's lost for the moment, but it doesn't mean it's out. We can still come up and test here, up and down, bounce. But that's kind of how I'm going to be playing this thing at the moment. I think that sort of the dollar's going to bide its time. And this is the thing, I know I ramble for, this is 15 minutes now, but this is how I build the sort of the narrative and the structure of what I think price action is going to do. And I don't think we're going to be seeing dollar go flying through straight away, but I think we're going to be seeing some more chop while it sort of consolidates here. And then I think we're going to get something that's going to break it through to the top side over here. Now, if it does break down below, sort of like, 101, then we can start to look back down at these levels over here. We look at the 61% of this sort of move up over here. My base case isn't that. Though, I could see it sort of coming down to, say, the 38% or even a little bit lower, down to some of these levels over here, potentially. But like we sort of had with this area back here, where we sort of shot up, this is what I'm talking about. This is exact the price action that I'm sort of expecting to kind of see. Chop. Any dip down below, if you watch the videos that I was doing, this is back sort of end of May, this whole period here, I was saying that, look, anytime you break this as support here, it's going to get bought up. Did this little sort of fake down here and then fired up, use that to hit all the stops and then sort of move up to the highs over there. I'm expecting to see something similar through this period over here. So not rushing into, hey, look, dollar's got to sort of go higher. And how I think it's applicable is that while we see this uncertainty, while we see this like chop, I think we're going to see flows bounce more into the metals. So I don't think the metals are done yet. I think this chop area through here can see the metals get a little bit higher. But I do think eventually, particularly if we do actually consolidate, that we look for a little bit of a move higher. But consolidation, like I was saying, consolidation favours continuation. Look at the direction that you come into the consolidated period. You got a 70-30 split that you're most likely going to continue on that move. So it's just sort of biding its time. So I think that sort of we could see some sideways action coming up. Short term on the 4 hour, we've obviously broken through. We bounced from an area that we expected to kind of bounce from anyway. So that's fine. Whoops, let's get rid of this. Chart's getting a little bit messy. But, just because we've sort of come through here doesn't mean, okay, we're necessarily coming down over here. But anywhere in this kind of area over here, the lower it gets, I think we're definitely going to see a move up. Because, again, the three-leg structure of this is one up here. We're going to get a pullback, and then we're going to get a move through like that. Even if this thing is going to fail, it's going to have to test up into this zone again, and then it's going to fail, or at least have a drive towards it. So any sort of moves down to this area over here, I'm going to see as US dollar buying, and depending what you're trading, shorting your cross, shorting metals, if we get the dollar down into these areas over here, which will give metals a little bit of a push up higher before we can get back on the short side, target that breakthrough there, and that'll target the breakthrough on the metals. So I do think that sort of like, particularly with gold, we've probably still got lower to go, 35 to 3,700 or so. Silver, I still think we could probably get down towards 50. So, there are still, I don't think the job's done just because we broke this one little thing into the end of the week. I think the wrecking ball has been set in motion. It just needs to suck out a few more people first, take a little bit of time, and then we sort of start to move forward. Because if we look at this on a weekly, I know it's pretty messy here, actually. Whoops. Okay, something's happening here. Yep, there we go. All right. Yep, take all that off, whatever. If we look at this at a weekly, that doesn't look like necessarily, that's just one tap into here. Things don't generally come up unless you get something massive like this, I suppose. But generally, if we look at this kind of stuff here, tapped into it, second effort, unable to break through. That puts the emphasis back on the swing point down here, the bounce point, and it broke through. But you see the three wave. You can see it through here. Wave one, pulls back, tackles that high, breaks through, pulls so it moves forward. Take one, pulls back, tackles the high, unable to break through. Now we're targeting the bottom down here, breaks through, bang. And that's how you'll turn around. And we'll need to see something similar like this if this is the top area here. This is just an expected area where we could see a sell-off, and we did see a sell-off. So let's put some of the stuff back. Don't want to lose all the drawings. Anyway, okay, so enough of all that. So as I said, look, I think sort of consolidation for a little bit of a period through here. I think sort of we could probably see a bit more of the bounce on the metals. While we do that sort of consolidation, any sort of move down below sort of 101, I'm going to be buying dollars and looking for that major breakout to come over the next week or so. All right, let's flick on and we can have a look at gold. So just make sure. Sometimes it's a bit slow and so I sort of fear that the computer's about to conk out or something. So look, we got this sort of nice break on gold yesterday, and I covered this actually. If you have a look, I did a European update of this move here. So obviously using different charts, I'm so going back and forth in that. But just to give a little bit of a recap in case you missed that one, this is the signal down here. If we put it on a 1 hour, you can see it a bit better, that we could see the buyers make a consensus effort to move up. This was Asia Friday. And this is your early tell here. Again, it's that three wave. Down, we found support, we found resistance. Okay, there's one leg, two leg. We know this stuff's going to happen. We know this third leg's going to happen. This third leg is our tell leg. So this is either going to give us double bottom, in which then we look for range, which is consolidation, which then, as I said, favors continuation. Breakdown here. The other alternative is that you get lower low. Well, we know which end, lower low, then you're going lower. Or, oh, geez, well, no, too many times here. What the hell's going on here? Technical difficulties. Oh, we go. Sorry, back and forth here. Where's that chart gone? Okay, so don't worry about that. Anyway, or the third alternative is exactly what we got, which is support, resistance, higher low. Higher low is the early indicator that we may sort of be breaking higher. And obviously that's what we got through yesterday. Tapped right into that sell zone, right where we said it would happen. Watch the sort of European update. That was the exact call that I said. So to break through this area here, this is a sell zone. We can see the sellers. Look at this. This is the same thing. And this is why I say all this technical analysis is exactly the same. Doesn't really matter what you're trading. There's nuances to different things, of course, but the general idea of flow and structure is still exactly the same. You look at where have we seen the selling? Where would we see the selling again? Okay, something's going on here. All right, 2 seconds. All right, don't like technical difficulties. Here's the selling. Where's the selling going to be again? Exactly kind of where we thought it would. And this is what I'm saying. This is on a 1 hour here. So it comes back up to this area. Things don't break through first time. You get a bit of a pushback. That's fine. This was Asia yesterday. Come through again. The sellers try it again. But you can see this time that the buyers are actually really not allowing it to sort of come back at all. Bang, it pushes through. Once it pushes through, sellers are sitting here, sellers are sitting here, sellers are sitting here, sellers are sitting here. So what happens? They come back down. They're like, I got that one wrong. It's going higher. They close their shorts. Bang, and we move up. Where do we target? We target where we saw the sellers previously. Over here and over here. What happened? It pushed back. Doesn't mean the move's done. It's just that you can expect a reaction from that level. And this is exactly what we just saw, or what I just covered with DXY on the higher time frames. You're coming back into, this is equivalent to that zone from May 25 with DXY on the daily. This is a 1 hour on gold. Same sort of thing. Comes back into it. Doesn't break first time. Pulls back. What are the buyers doing though? The buyers potentially, we could see them if they come back down over here. That is going to get a reaction should we get that. But what we're actually seeing is that they stepped in a lot earlier. They stepped in here. So this is where the buyers, they should say buyers, not buy zone, but whatever. You get the point. Green for the buyers. And the push it back up. This is a bit of a funny close here because, as you can see, as the last 5 minutes here, people just went $20 or so. Well, last 15 minutes. Just shot $20 straight up. Now, as to what that is, I don't know. Look, that is pure speculation. Maybe it could be people sort of saying, hey, let's see how it looks at the end of the week. And you know what? It looks bullish short term. Looks like it's going higher. Well, what would you do if you had shorts? Well, you'd close a bunch of shorts all in one go, enough to move the market and rocket it like that. I don't think you're necessarily going, hey, look, let's buy gold on the idea that some sort of news is going to happen over the weekend, which is going to fire gold through the roof. If anything, you probably think a negative of that, because the only thing we're really looking at the moment is with the Middle East situation. I just saw the US fired a bunch of rockets back in retaliation to the attacks on a commercial ship on Thursday. So we know that kind of news, like an escalation, is actually negative for gold. So you wouldn't be buying gold based on that. So that's why I don't think it's necessarily a buy. I think if anything, I mean, look, it's the last 15 minutes of the week. Who's really at their desk? But to me, that's probably more sort of like, hey, this thing's going higher. Let's close our shorts enough to sort of move the market $20 back up into that level there. But so I normally sort of say I disregard the last hour of last couple of hours of a move of a week. So anyway, look, point is that this is our breakout. This is our new breakout point here now. So you get above here, we look for the same kind of structure. Where do we look for? Well, there's a couple of things that we can look for up above here. We've got a couple of zones that are coming into play. This little area back over here where we had some buyers, that was a bit of a sort of a tussle area on our way up. You can see, pushed up above here a little bit, but so that could be an area, but above 34, that's going to be our body fill. This is what I sort of covered before. That's our body fill area. These are all areas in where you could expect some profit taking should we come up and visit them. So we start to go, okay, well, look, if we're looking at this as a whole move coming down here, say this bounce wants to continue. Say that was people going, hey, it's going high, and we're going to sort of see some continuation. That's speculation. I'm not hanging my hat completely on that. But should we break through, say, 4,100 here, you're then battling very quickly up into this zone where we've seen some buying, we've seen some selling. The market tried to get back above, but really that was just a fake out with an engulfing, which led us all the way down here. So your upside in the short term is pretty capped, in my opinion. That's kind of where you're looking to up into this zone here. If you do get a breakthrough here, if you do get a reaction here, you look for the buyers again. You just want to see that continued push up from the buyers like that. You want to break through, I think that's the way to break through. I don't think necessarily we're just going to open, stop, and just pump straight up over here. But these large kind of moves like this can tend to be pretty good targets. So ultimate sort of target through here, and this is why I sort of cover these things at the same time, say we do get that chop in the dollar, say we do get that sell-off in the dollar, well, not sell off major, but say we do get that sell down in the dollar, that's going to see flows come into gold and into your crosses, into silver, into these kind of things. But this is an area that I'd like to sort of probably get on the short side from. Now, this might be a bit ambitious. Where we go, sell, like this one we can actually make sell zone. If we do get a break above 41.40, we look for 4,200 or 41.90, then, that and change, and that's the trade that I'll be looking for to really sort of move back down here and get on the short side again. So it does mean that sort of like, it could be a little bit of chop with the dollar, chop with gold, up, down, hit these levels, break through, but they're the kind of levels you want to sort of see pop to see to ultimately get to this kind of level where we can really target the lows. And the reason we want to do this kind of thing, apart from the fact that it's obviously you just want to short these things from a higher level, we look at the larger structure again. Down found support, up find resistance, we're going to get that third leg. It's the same structure every single time. And if we are going to get a bigger recovery, you're going to have to see this little move down here where you've got the buyers make a consensus effort. This is on the 4 hour. You're going to have to see that on a much bigger scale. A move up like that. Should you see that though, that's the way to see a bigger recovery for gold. But what we can take away from this is that, you know, one, we're definitely in this leg here at the moment. We're in that kind of wave 2 of this stuff. Now, it's not necessarily going to come here. It may just come here. It may sort of move like this. This third leg may come down for a double bottom, may come down for continuation, may come for a high low. You don't know that. Nobody knows that. But what we're trying to do is pick out what leg are we in, what time are we looking long, what time are we looking to sort of take profits on those longs, and what time are we then looking to flip and rotate back into the shorts. This is how we're going to trade sort of intrasession. Because, you know, you could say, hey, look, I'm just going to be short, but what do you do through this $200-300 bounce? Nothing. Just wait. Well, there's options to be made with these things. So it just depends your style and how you want to trade with it all. But in my opinion, it's sort of like, as you can see with these sort of 3-leg structures, we can sort of say that, hey, look, you know, should this thing continue? These are the levels that we're looking at. Should it sort of come back down? We're going to get this leg down here. Very, like, you know, I would say at this point unlikely, but we could push all the way to 42.20. You know, this could say takes out here and goes bang up to here. But what we can still definitely say is even once we get to these kind of levels over here, we are going to see a move down like this. It's just about paying attention to what leg we're in and are we seeing the buyers move up like this? If we see this move up like this, it's exactly the same indicator as this. Buyers move up. We tackle the bounce point. In this scenario, bounce point is this zone here. You break through that bounce zone, then you've got your recovery. I don't think that's the case. As I said, I'm not in that camp. I'm just saying that if you think gold's going to recover, that's what you need in terms of structure. I think that's more likely what we're going to do. I think the fact that we broke these lows over here, we're going to see a little bit of a squeeze, and then we're going to continue further down because I think the dollar is going to go higher. That's my sort of plan of attack with it all. All right, let's keep on ticking on and have a look at silver. That's not the chart. This is the chart for silver. So silver, we got a similar kind of sort of bounce move up through here. Again, look, I covered a lot of this stuff and the actual structure and flow, so I won't go over it all in the European update from yesterday, but that's certainly worth a watch because I obviously went through the gold structure quite in depth then, but we're seeing similar with silver, a little bit different. This is the chart that I was using. And we can see that, look, it's coming up, it's testing here. So gold's outperforming silver a little bit at the moment. That's fine, we know that. Again, I could see this probably continuing a little bit. And then should we get up to, you know, these kind of areas over here, this is the kind of area in which I'd probably like to get short. Sell zone here. Up over here, which is back up, 62 to 63, that kind of area over here. Again, because I do think that we have some downside to sort of come with it all. I do think the fact that we've broken this structure to this bottom here, again, 3-wave structure, you can see it's even the remnants of this last sort of one that I've done through here. Wave 1, we got support. Whoops. Wave 2, up, found resistance. Wave 3, came down and tackled it. Didn't break first time. And this is again the same sort of stuff that I say over and over again. These things don't generally come firing down into it and then break straight through. If they're going to break a level, they come down, they do a little bounce, and then they sort of come through with it all. So this is, again, if you rotate this upside down, go invert, because it's all exactly the same, doesn't break first time. This is where we're at, and this is why I think that DXY is still going to go higher, and why we sort of traded that period the way that we did, or the way that I did yesterday, is because this is an area, this is upside down, so, but, you know, it's the same thing, support resistance. This is an area, we came back and tested it, we pulled back, then we went through. DXY at the moment is in this period here. It hit a zone where we could expect the sellers to be, it pulls back, bides its time, and then it powers through. That's what I'm looking for with the dollar. And that's why, with these things, I think we could still get a little bit higher, but I think ultimately we're going down further because this one broke through this level. So we're in first leg, we've found support. What do we know is going to happen? We know we're going to find resistance. What do we know is going to happen? We know we're going to at least tackle the lows. And if this sort of comes down with a higher, you could see the buyers move up from the zone. We see support come in around 58. Well, then we're targeting back over 63 to see if that's going to recover and come up a little bit further. But as of this moment, we're in leg 2. So we know that leg 3 is going to happen as well. We don't know where it's going to come. Like, as I said, it could come up to the 61%. We'll have to sort of play that by ear. But regardless of all that, we do know this 3-leg structure is going to happen. So it's a repetitive sort of thing. It doesn't matter what price, what time frame you're on. I mean, even if we look at just this leg down here, and this, I know I sort of keep repeating the same thing, but this is what technical analysis is. It's being able to pick these things out. If you look at this breakdown here, it's this as its own little move. 1, leg down, we found support. 2, we found resistance. 3rd leg, boom, double bottom. I told you, this has got a 70-30 expectation. Again, I just kind of picked those numbers, but basically it's, you got a higher expectation that consolidation will favor continuation. So a double bottom opens it up to the idea of a range. But as you can see, it's actually breaking out to the top side there. Nothing's ever a guarantee. So the failure to get the lower low means that you need to consider buys. We've seen a push back up over here. It's finding resistance actually right where we kind of sort of thought the sells would be. And this is still 23% of just this leg down here, which we know is still a very bearish continuation. Well, we just know it's a continuation level of Fibonacci. So I wouldn't be surprised if we do get a little bit of a pop here. But as I said, if we get up around these sort of 62s, I think this is a time to give it a shot to sort of sell this thing, because we do know that this 3rd leg is going to be coming. May overshoot a little bit, but you will still get this sort of 3rd leg down over here, which is a little bit of a safer kind of entry, picking that kind of direction. All right, and finally just with Aussie. Aussie is not really doing too well compared to these other things. Aussie obviously is not part of DXY, but it is a cross with the US dollar. But it has its own intricacies. Okay, that's not right, but it doesn't matter. It's Saturday morning. Intricacies. It's lagging a little bit here. So we did see, obviously, the dollar come off a little bit, but Aussie was really unable to do anything. And it's in a very vulnerable position here right now. Because if we look at just this last leg down here, it can't even get past the 23% at this stage, which is very strong bearish. I think the main reason factor that that's not really doing so well is because equities are looking a little bit shoddy at the moment. So where are we at? Actually, I might have let's see if I pull up the chart. I know what I can do. So put it on here. Just as an indicator with this stuff, that was that measured move as well on the dollar, which worked out very well. This is the Nikkei, and this thing has been absolutely all over the shop. We're talking like, what's this sort of around sort of 58, so about 4,000 points just in one direction here, and even more from all-time highs up over here. What's that, about 5,000 points in one direction? Yeah, you got a bounce there, but where did the bounce come to? The bounce came to the breakdown point. Breakdown point clears it out, and as soon as they opened it, bang, started hammering again. Look, it doesn't mean that it's over. Actually, if we look at zoomed out a little bit more, this one here, you can see that realistically, we're just back to these levels here, and it's a strong support level there. So we did get a little bit of a bounce into the end of the week. Just having a quick look, actually. So, 1 second. Just give an updated one. This is kind of where we sort of finished at with Nikkei here. You can see that it's grabbing this support. You can see underneath here how many times that's hit. Boom, 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 boom. So it's holding that support area down here, but it's obviously a little bit sort of heavy. And these sell downs are quite strong. So this, I think, is potentially weighing on Aussie a little bit, just because Aussie is a risk asset. You know, equity markets have been pumping. Aussie's been very resilient. Equity markets start to come off. All of a sudden, Aussie's looking a little bit not so so rosy with it all. And I think that's why we didn't get the kind of recovery that we were kind of expecting with the short-term dollar weakness there. Aussie just didn't respond because it's got other factors involved with it all. So, you know, even though the market was selling dollars against a couple of things, obviously we saw it, you know, the metals recover. Obviously, they just covered for half an hour or whatever. Yeah, we saw other things like Euro's pretty much an inverse of it all. Euro, bang, pushed up. Obviously, it came back down here a little bit, but that's a fairly decent little bounce. I mean, from the lows here, this thing went up, you know, 1%. What did Aussie get? Aussie barely did anything. Actually, 0.7 or so. A little bit of everything. But anyway, point is it didn't take out the bounce high. And I think that's crucial. So where we're at with Aussie, look, this is actually a bit of a negative divergence down here. We made a new low. Buying pressure is still quite high. Even with that, it was unable to springboard back up. Aussie's very vulnerable at this position here. Now, if we see some dollar weakness and some dollar chop, you might see Aussie take advantage. If we see equity markets hold that support, you might see a bit of a push up. But again, I think this is just temporary. So any move up to these areas where I'd like to be short, again, would be around here. If we can get a nice structural retest of this area here at high 69s, I'd like to get on the short side. And certainly if we get down underneath 68, 70, I think it's a little bit of good night for the Aussie. Because if we zoom this thing right out, this trend is from April 25. And it's testing out the bottom of this thing at the moment. And it's really hovering around here. What I'd like to sort of see is one last hurrah to really sort of step in and try and, you know, take out some stops, draw in some more longs to give the fuel for the fire for this thing to break down here. That's the kind of trade that I'm looking for. That'll be the confirmation. If we can get a push up over here to this sell zone and then get a push back down over here. Very outside chance may we get sort of some move up into these areas over here. I think I just don't see the dollar showing enough weakness and markets really kick into all new highs to get a move into this area here, which would be a very large inverted, sorry, not inverted, but a very large head and shoulders move. I just don't see it happening. But if we get a push to here, or even an overshoot up to, you know, test 70 or just above 70, anywhere in this area over here is definitely a sell for me. But initially, this is where I'd like to probably target. We'll have to see. If the dollar really sort of pulls back a bit, obviously Aussie will step in line. If we see equities recover a little bit, Aussie will step in line. It'll get that move up over here. If we look at this sort of move from the highs to the lows down over here, this is only 23%. So if we get a sell in this zone here and we target these lows and we break through, 23% is a very strong continuation move. Even up to 38%, that's why I would give it up over to here as well. That's the other sell zone. Should you get up over here, depending on the timing you're coming with this falling resistance as well, that's another, that's another area that I'd like to sort of look to sell as well. But I think its destiny is kind of coming down here. It's just a matter of can we get a better position and a better level to sell from before we get down to those levels there. we'll see how we go. Bullock's apparently speaking over the weekend as well. So, I mean, look, RBA is actually still relatively hawkish. Let's be honest in that. I mean, look, inflation's still high. Bullock was sort of saying, hey, look, prior to the war, we still had all this inflation issue. She stressed that a number of times. But as I've said a number of times, local data's fine, but it does not matter if the market consensus is to buy the US dollar. It doesn't matter. All it'll do is save the Aussie from getting demolished. If you had a dovish RBA and the dollar's being bought, that's when you're down like this. But you need to weigh in the factor that the RBA is still quite hawkish, so it means it pairs the losses a little bit, but it won't save the Aussie. The only way you're going to save the Aussie if it turns out that Walsh is actually dovish and he was just doing this to sort of like distance himself from the idea that he's just a Trump bitch boy kind of thing, and he was put in there and now he's just going to do everything Trump says, which I don't think is the case, but you need to contemplate these things potentially. But anyway, look, that's the bigger picture. I think short term in that, I do see it sort of stabilizing a bit here. If we see that dollar weakness, if we see the metals continue a bit, if we see equities continue or sort of hold their supports, look for a bounce up through this area through here, but I'm going to be looking to short these zones should we get the bounce up there. All right, and finally just have a look at what sort of data we got coming up this week. We've got Bullock, as I said, she's speaking. Oh, look at her working on a Sunday. Good on her. We've got bank holiday over there in Italy. What's it sort of... banks will, in most regions, do not observe this holiday. What day is it? Oh, the feast of St. Peter and St. Paul. Good on you. Anyway, Monday, typical kind of thing. No data, nothing really sort of coming out there. Tuesday, low-level bits of data, nothing really too important. Tuesday, Wednesday, consumer confidence. Tuesday night with the US. We got jobs. Oh, is it the new month already? Jeez, of course it is. Wow, I didn't even sort of touch on that. We got end of quarter, end of half, and end of month, of course. Tuesday, I think it is. Monday. No, Tuesday. Tuesday's the end there. And then, of course, bang, into the new quarter, new half of the year, new month, that kind of stuff. This could affect flows. I don't know enough as to sort of say, hey, look, this is what the big banks are doing, i.e. selling dollars, buying dollars. I would think maybe they'd be booking some profit. Again, this is speculation. I've got no super basis for this. My feeling is you've just seen this super strong move with the dollar. Again, this is me just talking to myself, really. But super strong move with the dollar. You want to make your books look a bit better. Well, you bank some of that profit, don't you? Coming into the end. Makes you look a little bit better. How'd you do for the quarter? Wow, look at this. Dollar long positions. Bang, 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 bang. Lock it in. So maybe we could see some dollar selling based on that. That fits into the idea that we could see the metals push up a little bit more. Fits into the idea we could see, Aussie bounce a little bit. But come the new quarter, new half, new month, I could see these things resuming. So... be interesting. I'll come back and revisit that next week and that sort of see how that one played out. But anyway, so back onto the data. Expectations here. Jolts down a little bit. Obviously, the Jolts is just one of those ones you plug in, but obviously Jolts is job openings. Lower numbers there. Okay, wow, that's not particularly rosy for the US. But the thing is, the dollar's very strong at the moment. So, I mean, the economic data is very strong at the moment all over for the US. It's actually doing quite well. Moving forward after that, we've got Walsh speaking on Wednesday night. We got PMIs, ISM PMIs. There's a little bit of a lower expectation here again, but again, above 50 is expansion. So, this is looking a little bit more positive for the dollar still. Where's ADP? Is this just a weekly ADP now? I forgot actually what's happening with ADP. I think we're actually, instead of getting a monthly, we get like sort of weekly updates, I think, with the ADP. I actually haven't sort of looked at or seen it so much on the news, but the data, I mean, the calendar, geez, I'll get there. ADP, little bit of a tick down. We've got Walsh speaking. We've got the ISM just covered. And then on Thursday, we got NFP because Friday's a bank holiday in the US. Because Saturday is July 4th. So they've ticked everything earlier. Okay, it's going to be a bit of a choppy week here. So Thursday we have NFP, and that's looking a little bit weaker as well. Okay, so the data's not looking exceptionally rosy for, like, it's still okay, it's decent, but it's not, the expectations are a little bit lower. So again, maybe this is all just sort of fitting into the narrative, but, you know, expectations a little bit weaker, end of the quarter, maybe we could see some dollar selling in this, which is fine with me because I think that flow is going to go into pushing metals a little bit higher, Aussie a little bit higher, but I think eventually things are going to revert to what they're going to do. We're definitely going to get that retest of that breakout level on the dollar, and so I do think that they're going to be buy the dip in the dollar options. All right, that's it from me.